Alrighty, folks, so we're going to be going over 5 companies in this video, 5 stocks, all of which just reported earnings this week. I think one of them was this morning. All the other ones were, over the past couple of days. So we're going to break down these earnings, the charts, what I'm looking to do, all that good stuff. But first, don't forget to get up to 16 stocks for Moomoo, guys. Use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks, each up to $2,000 right off the bat. And fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000 on top of those 15 stocks for a limited time. You also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So get on it, guys. Use that link down below. And with that being said, folks, cheers. Let's dive right into the video. So like I said, we're going to go over 5 companies in this video, all of which reported earnings. And now that I'm thinking about it, let me pull up the notes tab here, guys. You can't see it, but I can see it right here on my monitor. So the first one that I want to go into, actually first, before we do that, let's take a look at what the indexes are doing right now, as we are at, what time is it? 2:15 p.m. on the East Coast on this beautiful Friday, guys. We're getting more towards the end of the day here. So it looks like we're green today, guys, except for the Russell, which is pretty much at break even. Other than that, we have the NASDAQ up 0.4%, the S&P's up 0.3%, and we have the Dow also up 0.3%, as the VIX today, guys, look at that, is down over 5%, and we have gold and silver up a little bit, nothing much. Gold's up 0.1%, and we have silver, let's see, actually no, silver's down about 0.1%, so not much movement in the metals. And we can see on crude oil, let me pull that up, this is up around 1%. Now it's pushing towards 87.75, $88, right? That was resistance, all throughout today. And if I pull up this 20-day chart, you guys can see over the past couple of days as well. So if $88 breaks on crude oil, guys, let me actually put my alert there now. And by the looks of it, it kind of, it looks like it wants to break out. If we do successfully break out of it, though, there could be a leg up from that point, as we do have an ascending triangle on this 1-hour chart, do we not? You guys see this right here? That's a textbook ascending triangle on crude oil. So if that plays out, guys, boom, we break 88 and we could be going up even more, maybe back to 90 plus a barrel at that point. So guys, oil's on fire, no pun intended. We have all the indexes up pretty much except for the Russell, which is at break even, and the metals are not doing much. They're also at break even, as the VIX is down 5%. So not too bad of a day today across the board. Pretty good, actually, if you ask me. And maybe we'll loop back around later in the video and break down the indexes a little bit more. But for now, let's dive into these stocks, with the first one being GameStop, ticker symbol GME. And mind you, this is down, I think, what, 6%? Last I checked, yeah, still down around 6%. And it looks like they reported numbers, was it 2 days ago? I can't believe I forgot to talk about GME. I think I completely forgot to talk about them. But they reported earnings on, I believe, the 6th, which was on Wednesday. Yup, and after the bell, this stock shot from around $18.50 all the way up to over $21 per share, up 16% after the bell. And well, since that point, we've lost all those gains and some, right? You can see we're down about 18% from that high, from post earnings. So let's see what they ended up reporting, guys. It looks like they did -3 cents EPS, which beat the -14 cents expected. And they also beat on sales, $1.16 billion versus $1.14 billion expected. It looks like cash equivalents, and marketable securities were right around $1.19 billion at the close of the quarter, which is solid. And yeah, man, they double beat. EPS, revenue, not bad. Not seeing anything here on guidance, though, which kind of sucks. But it looks like here Wedbush adjusts their GameStop price target to $6 from $6.20, which obviously is a lot lower than where we are now. And they keep their underperform rating. So technically speaking here, guys, this does not look good at all, right? We're actually trading more towards the lows now than the highs, being about $28 on this 4-hour chart. Now we're at what? $17.50. We're pretty much right at the lows from the middle of March, also from the beginning of this year, beginning of January, right? So this is in a very interesting spot here, guys. We're under the moving averages. We have a death cross. This is not looking so great for for GME, at least in my personal opinion, in the short term. And sure, maybe if we start reversing above, above 20, 21 bucks, maybe that, then we start breaking out. But as of now, it's not looking so good. The Bears are clearly in charge. And we also had Dave & Buster's report. I believe they were yesterday, or were they this morning? No, they were 2 days ago, actually. Oh my gosh, I forgot to talk about them on this channel as well. Either way, they were on the 6th after the bell, and let me tell you guys, this thing was very volatile after earnings came out. It went to $39, down to about $36, then it dumped to about $34 the next morning, it looks like here. So let me see what they actually reported. It looks like Dave & Buster's ended up doing, give me a second here, guys, adjusted EPS of 94 cents, which beat the 93 cents expected, but they missed on sales by about 14 million-ish dollars, 540 million or 42 million versus the 559 million expected. So they beat EPS barely, but they missed on revenue, which is not the best sign. And it looks like here Dave & Buster's will raise prices on games soon after boosting the buy-in by 33%. Holy crap. So it looks like inflation is really taking, Dave & Buster's through the ringer right now. I mean, geez, 33%, and they're going to raise prices on games on top of that, man. Oh my goodness. So it looks like Dave & Buster's stock is in free fall mode. It's down around, let's see, 25-26% from recent highs. And to me, guys, it looks like it's a stone's throw away from that low, which was at $31. I mean, we have about, 6-7% more to go. Then we're right at the lows, which is not a good sign. So the next one that I want to talk about here is DOCU, which I believe they reported on Thursday. I could be wrong. Yep, Thursday after the bell, and their stock shot up a good amount here. It looks like about 5%, 6% after earnings, and now we're collapsing, right? The stock's down, well, not collapsing, but the stock's down about 2% right now, and earlier in the day, it was down about, 6.5%, so it was down even more. So let me see what DocuSign ended up reporting. Let's see here, guys. It looks like we have a bunch of sell ratings here, neutral rating, underperform rating, sell rating. Oof, that's not looking so good. But let's see. It looks like they did EPS. Where the heck is it, guys? Adjusted EPS of 72 cents on revenue of 687 million, and they see the next quarter revenue at 687 to 691 million, pretty much right in line with what they just did. And it looks like Citigroup has a buy rating though on DocuSign, $81 price target. They just raised their price target, believe it or not, which is interesting there. So yeah, not bad. I mean, did they beat on EPS and revenue? I'm not really seeing the estimates here, but it looks like they see full year total revenue of 2.72 to about 2.73 versus 2.72 billion. All right, right in line there. And their Q3 revenue is a little bit above the estimate. So not bad, guys, not bad for DocuSign. Let me pull the 4-hour chart up and see. One thing worth mentioning is, guys, we're still in this channel, which is not the best sign in my opinion for the bulls, right? We've been in this channel, downwards channel that is, for months. So we're going to have to break above it, which if we do start pushing above, let's say, 57, we start pushing above that point, that's where we could start breaking out. But for now, I'm sitting on my hands. I'm being very patient. We also had two more companies that I want to go over here. One is Restoration Hardware, which, my goodness, guys, is down 15% right now, completely collapsing. And they just reported, let me see here, guys. They ended up doing, where the heck are their numbers, guys? Are they not even listed here? I'm going to cry if they're not listed here. Let's see. Nope, they're listed here. There we go. 3.93, or rather $3.93 EPS, which beat the 256 expected. What the heck? And sales beat 800 million versus 784 million expected, and their stock is collapsing on that. What? And they raised the low end of their full year 23 revenue guidance. Looks like now from 3.04 billion to now 3.1 billion versus the 3.07 billion expected. So what's going on here, guys? We have an overweight rating, a buy rating. Looks like here, overweight rating, Wells Fargo maintains they raised their price target. So maybe it's just not, the numbers aren't as good as expected. But to see this drop 15% is pretty interesting. But then again, guys, this could have a lot to do with the overall economy, the housing market. I don't know. Maybe, we'll see. That maybe there's something that I'm missing here. Of course, I'm not an expert on Restoration Hardware, but it is down 15%. It's in free fall. And maybe this could make for a nice bounce back play. Maybe, just maybe, once we start to see the dust settle, which we're not getting that quite yet, but, you know, we'll see how that ends up playing out. And the last one is Kroger, which their stock's up over 4% right now. They reported earnings this morning, and they ended up doing, guys, let me see here. Let's see where they are. Looks like they did 96 cents versus 91 cents expected, and they missed on sales. Oof, guys, 33.85 versus 34.13 billion. So they beat EPS, missed on sales, and now it looks like same-store sales were up 1%. They missed the FactSet consensus of up 1.3%. All right, not the best, but hey, it is what it is. And it looks like here, anything else? Let me see here, guys. Guidance, anything else on guidance or anything on guidance? I'm not seeing anything on guidance, but look, this thing was very beaten down. The stock was at $50 and it got all the way to 44 heading into earnings. So it was already down 12%. It was in correction territory. So earnings were pretty good, right? Not bad. Better than expected. And that's probably why the stock is running, but don't get too excited because now we're very overbought. And now we're at the top of this channel, which could open up for, more selling to come. Maybe just maybe. So I'm going to set my alert at $48. Mark is at or above. If we do start breaking that channel, awesome, but I'm not, jumping in prematurely quite yet. We'll see how it goes, guys. Let me know your thoughts in the comments. And with that being said, we're about 10, 12 minutes in. I'm going to wrap it up. If you enjoyed it, hit the like button, subscribe, and don't forget to get up to 16 stocks for Moomoo, guys. Link down below. Once you open up your account, listen to this, and fund it with at least $100, you get 5 stocks right off the bat. And fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And mind you, each of those could be valued up to $2,000. And it gets even better, guys. Listen to this. Fund your account with at least $5,000 on top of those 15 stocks for a limited time. You also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So what are you waiting for? Get on it. Use that link down below. And with that being said, folks, cheers. I'll see you in the next one.